Hi, this is Terry Westbrook. Thought today we'd talk a little bit about short sales and foreclosures and what should I do. The questions come up when you have a property that is worth less than the mortgage amount. So we have to go through an evaluation process. That evaluation process is, are you going to buy again? If you're going to buy again, then the decision whether short sale or foreclosure impacts your credit. Short sale is going to probably impact your credit by 200 points or so in a reduction. If you have good credit today, it may be such that you'll be able to buy in the near future. If you go through a foreclosure, it's a more significant impact on your credit. Now, not only does it impact the ability to purchase, but it also impacts with your credit things like your auto insurance, things like auto loans, credit cards. All of those people look at your credit score to determine whether in fact you're a viable candidate to lend money to or get an insurance policy with. So it's not just a decision on short sale or foreclosure, it's a decision on what's going to happen in the future for other things. Now let's say you've made the decision. Let's go to the bank and see what they're thinking about this process. For example, if you sell your home, you're a traditional seller, and there's a traditional buyer involved, traditionally you'll get about 100% of value. If you're going to a short sale process, where the bank's going to get less money than full value for the transaction, you get about $80 for every $100 worth of value, or about 80% of the value. Buyers look at short sales as a discount, so they expect to get something less than a full traditional sale. With a foreclosure, it's almost like a fire sale. They're looking at a great deal. Now the property's been vacant for a while, 6 months or a year. There's deferred maintenance, there's other issues that are going on with that, so they're looking for a special value, getting about 60% of the value of a traditional sale when they go through a foreclosure. With that in mind, if I'm the bank, doesn't it make sense that the short sale should be the vehicle that they use more often than the foreclosure? That hasn't been in the past, but most recently they've changed their policy, and today they look favorably on short sales if we meet a number of conditions. Let's talk about the foreclosure first, and then we'll go to short sale. What happens in a foreclosure? You move out. You're no longer in control or ownership of that property. The bank secures the property, they change the locks, they most likely will winterize the property so it's not habitable. It is their home. Now they have to carry all those costs of the property throughout the period from the day that they take control of the property until it's sold and turned over to the new buyer. During that process, again, they take control, change the keys, and then they will hire people. A broker will come in and do what we call a BPO in our business, broker price opinion, to determine value of the property. They'll also do an appraisal on the property. The appraisal is there to determine whether the broker price opinion, which is market condition price, and also the BPO are in line. If they are, that's probably close to the price that they're going to list it at, or maybe a little bit less to stimulate activity. Sometimes some of the banks will in fact list it somewhat less than fair market value to incentivize people to make a decision quickly. They want the money back in the bank. They don't want to carry this house. They don't want the insurance. They don't want the utility costs, the taxes, just the overall carrying cost of the property. They want it sold. With that said, let's go on to the short sale. With a short sale, you stay in the property. Now something's happened here. You're probably behind on your payments 30, 60, 90 days. You've had conversation with the bank. They may or may not have started the foreclosure process. If they have, there's a period from the time the foreclosure is completed until such time as they take control and foreclose. That redemption period is approximately 6 months. So we have a window from the pre-foreclosure through foreclosure redemption period to actually market the property and try and get something out of it so we can go forward with our lives. Now, again, you stay in the house, you maintain the house, you take care of the house. They still go through the BPO, the broker price opinion, and the appraisal to determine value, but traditionally they don't do that until we have an offer in place. So I'll list your property. Property comes on the market, we receive an offer. The offer is within the range that we think is acceptable. We accept it subject to the bank's approval of the short sale. That's where the work starts. That's when we start taking all our forms, all the process that we have to go through to give the information to the bank such that they can make an intelligent decision that yes, this is a viable offer that they should consider. Now, once the offer is accepted, then we're still not done. There's a whole process that we have to go through of completing their paperwork again to make sure that they're getting the value that they feel for the property. So again, we manage that process. That process is not something that's very intuitive. There's online sources that we use all the time. There's several classes that I've taken for this. So if you're in that process of trying to make the decision, should I go through foreclosure or should I consider short sale? Or maybe there's such that the market is good enough that we can do a traditional sale. I'd love to talk to you. If you have the opportunity, call me, 616-292-7263, or visit our website at www.terrywestbrook.com. Thanks.